Hey everybody, it's Irk. Welcome to Get Irked, my channel where you can learn to invest for the long term. Today's video is a revisit, really soon, of Coinbase, the raging digital dumpster fire in space. In my last video about Coinbase, I said I thought it was very certain that we would see Coinbase's reference price of $250. In fact, here's a clip if you haven't seen the video. Yes, I think we're going to see the reference price. In fact, I think it's unquestionable we'll see the reference price. So you can see Coinbase's current low now is right above its reference price of $250. In fact, so close it's really negligible at $250.51. And you might be telling yourself, wow, it opened at $381 and it dropped all the way down here. This is a cost savings of, let's take a look, 34.25% off of the top. Here's the problem. Coinbase is currently in what we call price discovery. Price discovery in any investment class is when investors are trying to determine how much an asset is worth. With Coinbase, we received a reference price of $250, which may have been accurate, but it opened at $381. And at the time that it opened, Bitcoin was at an all-time high. So the chances that Coinbase was overvalued are high. Do we know if it's overvalued now? When it comes to technical analysis, bulls are looking for a pattern that's the higher high and higher low pattern. If you go back to the first day of Coinbase's trading, you can see we had a higher low, followed by another higher low, but in this case, a lower high. As long as you don't break the higher low, the trend is considered intact. So when we had the higher low on the following day, it looked okay until we had an all-out dump. At which point, the whole pattern has to start over again, and in this case, it didn't, with Coinbase getting lower low after lower low after lower low. The way I calculated how Coinbase might hit its reference price was using Fibonacci retracement. So let's do that again, just so that we can have the numbers right now. In TradingView, you just hit Alt-F, you go to the low of a move, click once, go up to the high of the move, of the bounce in this case, and click another time, and there you have the Fibonacci retracement, and you can see that we came all the way down to almost having a $246.57 price target. Let's draw another Fibonacci retracement, once again replicating this pattern over here, with the low of Thursday's drop down at $250.51 to the high of Friday's bounce, which was $267.07. And now you can see we have more targets below. If you go over to the axis and drag down, you can see even more targets. So over on our first Fibonacci retracement, you could see support at 207.37 and 183.15. On the new Fibonacci retracement, because it's a tighter bounce, you get closer numbers to get you even more support levels. So with our new bounce, we're seeing right around the $246 mark, just like the initial one. But we also have potential support at $240, $223.71, $207.15, and $196.92. So the question you're probably thinking is, where do I think it's going to go? Coinbase's price action since its direct listing reminds me a lot of a different IPO of a different time. As you can see, this one's done pretty well since then. But let's go all the way back to the beginning and see what happened in the first couple of days when this company first came public. So you can see that this particular company opened at $42.05 and dropped on the first day to a low of 38, followed by 33 and $30.94. And then the bottom fell out. This looks a lot like Coinbase, doesn't it? The bottom dropped all the way to $25.52, and it had a bounce. So maybe Coinbase will follow very similarly to this particular IPO. For those of you who are more astute viewers, you can tell it's Facebook. This was back when Facebook first came public and had no mobile offering. So investors were very skeptical of Facebook's long-term prospects. And it got worse. Previous support of $25.52 gave way, and it continued to show extreme weakness until this point here at $17.55. So if you're looking at how Facebook dropped from its opening price of $42.05, it ended up dropping 58.26% before it found its final support. what would that look like for Coinbase? So here we're back on Coinbase's daily chart. You can see I cleared all the drawings off of it. We've got a $381 opening on the first day, and it dropped from there. If you think about Facebook, it was a 58% drop. So let's see what that looks like here. 58% works out to be about $160. And that's if you base it off of the direct listing opening of $381. If you base it off of the reference price of $250, we've got an even bigger problem. 58% off of the $250 reference price is $105.18. Do I think we could go that low? It all depends on what happens in the upcoming week. So first, let's put our Fibonacci retracement back in from Thursday and Friday. You can see on this chart from TradingView that it's telling us the expected earnings report would be coming up on May 13th of next week, which is the Thursday. If the earnings comes out and they blow away earnings and the stock moves up, then this is the low. That's great. That's the catalyst that we need. We know that the reference price was accurate and everything's okay. If the earnings report comes out and it's good, but the stock moves sideways or down, that means that a lot of internal investors don't have faith that Coinbase can go much higher, and they're going to sell out at the reference price rather than risk further downside. If Coinbase comes out with a negative earnings report, I think we could easily see all of these support levels. I think $200 is a very realistic target. It's a psychological support, so even though it doesn't show up on Fibonacci, a lot of people will see $200 and think it will hold, and I think it could go lower. In fact, I think the initial Fibonacci retracement that we did back in the first video is still proving to be pretty rock solid, and that means $183 is a realistic target, as well as a potential as low as 106. It wouldn't be unheard of since Facebook did the same thing. Now in the long run, is Coinbase a good investment? I don't know. One of the key rules is that you should have a good management team, and Coinbase does. But the problem is Coinbase has a lot of competition in the form of Gemini and Kraken. What I think they should do, now that they're public, is use some of that money and get a big loan and buy Gemini. Leave Kraken alone so that Coinbase wouldn't be a monopoly. You need to have a competitor. But Gemini is the biggest competitor they have, and if they take out Gemini, they have more of a monopoly on the space and can start focusing on adding features like proof of stake. They can add more coins, and they can grow from there. But at this point, we're at a very young era for this particular company. And while Coinbase might be number one, it wouldn't take very much to unseat them, and we know that there's a race to the bottom coming when it comes to fees.